Today, the Supreme Court hears its first crypto case. Coinbase makes its argument to the SEC that staking shouldn't be considered securities. And Josh Frank of The Tie breaks down institutional investment in crypto following the collapse of digital-focused banks. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices are in the green today, reversing yesterday's losses. As of noon Eastern, Bitcoin surpassed the $28,000 level. Ether climbed 2.8%, trading above the $1,800 mark, and Polygon rose about 1%, trading at $1.15. All right, let's talk about the top stories. First, the Supreme Court is taking on its first ever crypto case today. The High Court is expected to hear arguments from Coinbase's lawyers, who will try to convince the justices to halt lawsuits against the exchange. One lawsuit is from a user in California who sued Coinbase after he says a scammer stole more than $30,000 from his account in 2021. The lawsuit accused Coinbase of violating the Electronic Funds Transfer Act by not investigating or recrediting his account. In the other suit, former users accused Coinbase of violating California's false advertising law by allegedly duping them into paying for a sweepstakes that offered prizes in Dogecoin. Today, the justices are hearing arguments in the crypto exchange's appeal of lower court decisions, which allowed the proposed class action lawsuits to move forward. The company argues that its user agreement requires disputes to be resolved through arbitrations. Next, Coinbase also just told the SEC that staking shouldn't be considered securities. This 18-page petition was written in response to the SEC's crackdown on staking after the agency charged the crypto exchange Kraken with failing to register the offer and sale of the exchange's staking as a service program, which it qualified as securities. The petition, which was written by the chief legal officer for Coinbase, focused on how securities law treats services related to the validation of proof-of-stake protocols. The letter also argued that SEC Chair Gary Gensler's assertion that the commission has expressed a new policy position and legal determination about a widespread industry practice through a single enforcement action rather than through any formal guidance is creating unnecessary uncertainty for market participants. It goes on to say the action against one company's embodiment of a staking service provides no guidance about what aspects of the embodiment or other embodiments of staking services may be of concern to the commission, nor provides a path for remediation if needed. We reached out to the SEC and the agency declined to comment. Last, FTX is suing liquidators overseeing the wind down of its Bahamian affiliate, accusing them of wrongfully claiming ownership of the now bankrupt crypto exchange's assets. According to the lawsuit filed Sunday, FTX claims that the affiliate was a corporate shell and the centerpiece of Sam Bankman-Fried's effort to, quote, funnel FTX trading customer deposits and other valuable property and rights to the Bahamas out of the reach of American regulators and courts. The Security Commission of the Bahamas began liquidation proceedings against FTX Digital Markets a day before the bankruptcy filing in the U.S. in November, and the two sides have argued over ownership of FTX assets and access to the company data ever since. All right, on to our main story. The closure of two crypto-friendly banks hasn't stopped Bitcoin's rapid rise this month. But just who exactly is driving this rally? Well, I spoke to Josh Frank, the co-founder and CEO of The Tie, to find out if institutional players like banks and asset managers are coming off the sidelines. All right, so Josh, the reason I wanted to speak with you today is because I think we've been getting a lot of mixed signals as to just who's driving this crypto rally right now. And I was speaking with a crypto reporter, Tanea Bakil, about this, and she mentioned that the data really seems to go back and forth, and it's really unclear as to whether it's retail or institutional investors that are driving prices. So do you have any insight into just how much of this rally is driven by institutions?
Yeah, so I think that's a good question, and I think it is a difficult question to answer. I think the one thing that I can confidently say is that the rally is being driven by U.S. and European hours trading, and generally Asia tends to be of a more retail-driven market. Something that I'm finding very interesting is, Bitcoin has been significantly outperforming the rest of the crypto market. If you look at Bitcoin's market cap dominance, or the overall percentage of the crypto market that Bitcoin accounts for, that number has grown from about 37% a couple of months ago up to about 47% now, right? So over the last 7 days and 30 days, Bitcoin is completely outperforming altcoins, which is generally an institutional sign. Retail investors are generally more interested in altcoins. And I guess a great example of that is one of the largest crypto exchanges. I know their best day ever was the day that they list Dogecoin. You can look at the volumes. It was Gemini. The best day ever was the day that they listed Dogecoin, right? And so, there's kind of, retail tends to be interested in more than just Bitcoin. So we're kind of seeing this, shift into Bitcoin, an increase in its market cap dominance. We service directly, The Tie does, about 150 institutional clients. And I can tell you now that we're seeing more interest, now than ever from institutions in crypto. And by institutions, I don't mean, a lot of times people in crypto have historically meant hedge funds and venture funds. I mean asset managers and banks. So real, traditional large institutions moving into the crypto space. So we're seeing that interest, continue to increase. And I think the fact that it's Bitcoin, it's being driven by US and European hours, and the fact that it kind of is coming at a time when, Silicon Valley Bank, went down, right? There's this kind of macro narrative around Bitcoin. Generally speaking, I think macro and crypto moving together speaks to, a move that at least is in part more institutional driven than retail driven.
Yeah, you talk about some of the clients that you have. I'm curious, how focused are they on quality when it comes to investing in the crypto space? Are they hyper focused on Bitcoin or other assets that they deem high quality? What is the sort of interest level for these big players?
So it really depends on, what you generally mean by institutions. I mean, a lot of endowments or pensions, for example, are just investing in other funds. They're not necessarily taking direct exposure to crypto. But what's kind of interesting is no one really knows this. Over the last few months, a lot of these large, sovereign wealth funds, for example, of large countries have actually received altcoins because the funds that they invested in basically returned assets in kind to these sovereign wealth funds and altcoins. Now they're like, what do we do with these things? Which is pretty funny. But if you look at how they're directly approaching crypto, I mean, generally it's with more of they're being very careful about how they're approaching the space. They're very careful about who their counterparties are, who they're doing business with. And that's increasingly becoming the case, especially in light of the FTX collapse or scam, whatever you want to call it, that happened last year. And so, generally speaking, there's also a liquidity issue as well, right? So maybe they would want to trade smaller assets, but what we see from an institutional perspective, if you think large hedge fund, and by that I mean 10 plus billion AUM, right? They're generally anywhere in the 10 to 50 asset range if they're going deep into crypto, with maybe less than 5 touching about 100 assets. And on the asset management side, you're talking Bitcoin and Ethereum primarily. So it's relatively more limited, though there are a few large asset managers that have publicly invested in projects like Aptos and Sui. So there is a bit of interest, but generally speaking, you're talking the smaller assets.
Final question for me, and it has to do with the macro environment. I think everybody's watching for the interest rate decision this week. How sensitive are the clients that you deal with in terms of interest rates and the macro environment right now? Are they likely to keep investing in these sorts of areas of crypto and the vision there if there's persistent fears of inflation or persistently high rates?
Yeah, so I mean, I think it depends who the person is. I think the market is generally getting what the rate hike is going to be, right? I mean, granted, we've kind of landed on 25 basis points like 3 days ago, so maybe, it's not that long of a period of time that these guys have to prepare. But look, I think, the reason Bitcoin is moving right now is because of this narrative of a hedge, right? Maybe it's a little bit different of the hedge that we had in November 2021, which is this inflationary hedge narrative, right? But it's becoming this kind of hedge against, the banks, right? Satoshi and the Genesis block printed, banks on the brink of bailout, right? So I think that narrative is partially what's kind of moved the crypto market up, right? So I think in that regard, I think if crypto can kind of latch on to that narrative, or Bitcoin can latch on to that narrative, because at the end of the day, crypto is a very sentiment driven, it's a very narrative driven asset class, right? Kind of we didn't have a narrative forever, which is why we were kind of just hovering around 20K, 21K. So if Bitcoin kind of can latch on and ride that narrative, I think that spells well for the digital asset market. But again, right now, Bitcoin is performing and altcoins aren't, right? So it depends what you're talking about. Like, are venture-backed companies going to be able to raise money? I don't know, but I think it certainly spells well for Bitcoin.
All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.